Welcome to the Freedom Capital Management Strategies Quarterly Market Review and Outlook. I'm Brian Zabora, Investment Director. I'm here with Pete Murphy, Chief Investment Officer. Pete, fourth quarter 2023 was a pretty remarkable quarter for financial markets. Could you just provide us a recap?
Absolutely. Thank you, Brian, and thank you all for joining us. As Brian mentioned, it was an incredible quarter for financial markets in the fourth quarter of last year. And what was most notable was how broad-based the gains were across financial markets last year. We saw strong gains in stock markets, both domestically and internationally, in fixed income and bond markets. We just saw incredible gains across the board in markets. And this contrasts sharply to what we experienced in the first three quarters of last year, in which the stock market rose, but it was a very narrow market, meaning that a relatively small number of large stocks drove stock market indices higher, while the majority of stocks had very minor or small gains, and bond markets actually generally declined in the first three quarters of the year. That script flipped completely in the fourth quarter, and we saw this sharp financial market rally across asset classes. And when we look under the hood to what drove that rally, the most notable driver was the sharp decline in interest rates that we experienced in the fourth quarter. We saw short-term and long-term interest rates decline materially, and when interest rates decline, it tends to raise asset prices across the board. Think about how a hot air balloon, when you fill it with hot air, it will bring that balloon higher. That's what lower interest rates do to liquidity in markets and generally lead to higher asset prices. And what allowed for those interest rates to decline? Inflation continued to rapidly decelerate toward the Federal Reserve's 2% target, a big shift from what we experienced in recent years. And with that, the Federal Reserve reinforced the market's expectation for interest rate cuts in 2024 after the sharp increases we experienced the last 2 years. A market change, and one that was really powerful for financial markets in the fourth quarter.
That's a great recap, Pete. Now looking forward to 2024, what's the expectations?
As we look ahead to 2024, it's important to put where we start in context. And to do that, I'm actually going to go back to the beginning of 2023, about a year ago. And when we look back to that time, investors entered the year in a very pessimistic state of mind. There was widespread expectation that recession was inevitable and that financial markets were going to have another challenging year in 2023 after the pain endured in 2022. And when you look at what transpired in 2023 that we just spoke about earlier, the broad-based gains across stock and bond markets, the outcome was tremendously different than what the expectations were going into the year. But if we look at where we sit today, the starting conditions are quite a bit different. Investors are entering the year in a very optimistic state of mind. We just saw a historically strong quarter for financial markets in the last quarter of the year. And so expectations are quite high heading into the new year. And with that, we think that the bar has been raised in terms of the expectations for the economy and financial markets in the new year, which is going to make it more challenging for financial markets to continue climbing higher. And with that, we think there still is some caution that should be kept and maintained as we enter this new year, given the high expectations that we're entering the year with. And one of the primary reasons we believe that's important is that while there was not a recession last year, which was widely predicted but did not transpire, we are not convinced that a recession has been avoided. We simply believe the recession likely has been delayed, and that the monetary policy tightening and the interest rate increases that were orchestrated by the Federal Reserve and other central banks over the past 2 years, the impact of that is still being felt and will continue to be felt in 2024, which is likely to lead to some degree of economic slowdown. While we expect it to be relatively mild, we do think that the probability of recession remains elevated, and with that, some of the optimism that investors are entering this year with likely should be tempered to a degree.
Pete, what are the key factors you're monitoring in 2024 to determine if there could be a recession?
There's three factors that we'll be watching closely in 2024. The first is inflation, and this likely comes as no surprise to you, as inflation has been in the headlines now for the past 2 years, and it remains in the headlines today, even though to a lesser extent. And the key question is, has inflation truly been tamed by the interest rate increases from the Federal Reserve and other central banks over the last 2 years? The direction is certainly positive. We've seen a sharp deceleration in inflation over the past year, and there's broad-based optimism that inflation is under control. So we'll be watching closely to see if that is in fact the case and if inflation remains tamed and close to the Federal Reserve's target level of 2%. The second is economic growth. It proved surprisingly resilient last year, and the question to us is, will it continue to defy the gravitational pull of higher interest rates? We've seen some pockets of weakness in the economy, whether it be in the housing market from higher mortgage rates to the manufacturing sector, but we've really seen overall economic activity remain incredibly strong despite much higher interest rates. Will this continue in 2024? We'll be watching that closely. Finally, corporate earnings. Corporate earnings surprised positively in 2023, but expectations were also quite low. As we enter 2024, expectations for corporate earnings have risen dramatically and continue to rise. And will corporate earnings be able to deliver on these elevated expectations?
Pete, there is a lot that investors could focus on that could be negative. There could be some cross currents this year in 2024. You have an election coming up. You have ongoing wars, both in the Middle East and still in the Ukraine. You also have continued tension with China and the US. Could you leave investors with some thoughts of how to navigate these cross currents?
Absolutely. So geopolitical headwinds and headlines are a consistent part of financial markets and investing. If you look back over history, it is very consistent that you're going to have some type of concern or risk factor out there from a geopolitical standpoint. And we typically advocate for investors to not unduly focus on these events, because while they may have short-term impact on markets, they generally don't have lasting or long-term impact. And with that, we advocate the importance of staying disciplined. Stay focused on your long-term plan. Don't let short-term emotional reactions to geopolitical or other events impact your investment planning and strategy. Secondly, don't try to time markets. We talked earlier about how investors were very pessimistic heading into 2023, but 2023 turned out to be a very strong year for financial markets. As we enter 2024, many investors are very optimistic, and there may be a sense of a fear of missing out if you weren't fully invested in markets last year. Stay disciplined, stay true to your financial plan, stay allocated in alignment with your risk, and focus on the long term. The next point I would make is to diversify. It's important to build resilience in your investment portfolio because economic and financial market outcomes are inherently uncertain, and building a portfolio that can weather a variety of potential outcomes is very important, especially with some of the economic cross currents we spoke about earlier. And the other point I would make on diversification is that with the rise in interest rates in recent years, bonds do offer a more attractive alternative to complement stocks than they have in some time. And so diversification, in our mind, has grown increasingly attractive over the past couple of years. And then finally, communicate with your financial advisor. Make your financial plan a living plan.
Pete, those great perspectives. Thank you for joining us today, and we wish you a happy and healthy 2024.
Thank you.